Hey guys, what's up? Welcome to another episode with me, Shashank. And in today's episode, we are going to talk about 5 stocks that can do a very strong rebound if Nifty does a pullback rally. Now, obviously, we've seen that the global economies are now becoming better. The war situation has gone down, touch wood, at least for some time. And we've also seen that oil prices have come down a lot. And we know that Nifty is currently not doing a good job, mainly because of the 3 heavyweights, which is TCS, Reliance, and HDFC Bank. But I basically went through a lot of con calls this weekend, and I was trying to understand what are some very good companies that have given splendid results and can go up faster if Nifty does a rebound. So today we're going to just do a deep dive about all these companies. Please note, none of this is a buy or sell recommendation. It is only for you to learn and understand. Always do your own research before investing. So the first company that we're looking at is Coforge. Now, if you look at Coforge, it is in the space of IT. And as you all know, IT has been hit the most. Obviously, with TCS, Infosys, HCL leading the pack of bad results in the last few quarters, we have seen Coforge actually coming out with a very good result this time. In fact, the result went up almost 49%. Now, Coforge is also doing a lot of acquisitions, okay? And this is a good time to do acquisitions. Why? Because if you see, the whole market is trading at very low valuations. So recently, they closed their acquisition of a company called Encora, which is a US-based digital engineering firm, on 23rd April 2026, and they consolidated all of this on May 1st, 2026. And that scaled basically their revenue, and that also gave it a lot of AI engineering capability stack, right? So that is something that is definitely very good here. And if you look at the revenue, how this has grown as well, you will see that the revenue has gone from last quarter to this quarter, obviously because of the acquisition, by almost 49% growth. The revenue in million terms has also gone up because of the acquisition. And obviously the acquisition was PAT accretive, so it went up by around 110%. And if you look at the stock actually has started already doing a rebound. Now, please note that this was one of the fastest growing stock, right? Coforge and Persistent, the two mid-cap IT twins that went on slowly to become a large cap company, so they're going very fast. But then because of the whole IT problem, they all fell down quite a bit. And if you see from the top, this company fell down almost 50%. And obviously, I know at that point, nobody wants to buy IT, but these are fast growing companies, including Persistent, including this one. And it has actually done a rebound from there of almost 73%. And very soon it is coming back to its all-time high breakout. And if it actually does the all-time high breakout, then you and me both know it'll start creating the new journey as well, right? The board declared a dividend of 4 rupees per share, and the executable order book for the next 12 months has actually gone to $2.23 billion, right? So this is again a very, very, very good result. The margins on the EBITDA has also come out at 20.3%. So again, a splendid stuff on this point, right? Now comes a management commentary. So let's understand that as well. So they have said that the key growth driver for this company is 86% of consolidated revenue now comes from AI-led engineering, data and cloud services. Whereas if you look at TCS, and HCL and Infosys, they're all less than 10% as of now. And because of the acquisition, they have basically got this advantage that is going. Next 12-month order book is basically 2.23 billion, which is up almost 44% year on year. We are confident of achieving EBITDA margin of 20.5 on a consolidated basis even in FY27. 4 large deals signed in the quarter, and the total order intake is almost $700 million over here, right? And over the last 9 years, obviously they've done a splendid job with 21% CAGR. But again, I don't want to see too much of past data. I'm only looking at what might happen in the future. And he's saying FY27 is shaping up to be an exceptional performance year for the firm. And the organic headcount has also gone up quite drastically as well. So basically what's happening in this company, couple of things, right? Number one, the acquisition is playing out. Number two, AI-led services are doing well. And we saw this with TCS and Infosys, that the AI-led services business is actually giving good revenue right now. So we might see a turnaround very soon in the entire IT pack. And this will be one of the companies that will move faster than your traditional IT companies, right? So why it leads to a rebound, and I believe that a re-rating of the fundamentals have basically started. Now Q1 is basically reading like a mid-cap compounder going into a large cap compounder. Even now at this point, they are doing a lot of acquisitions, and they're also looking out for more acquisitions as well. The order book is at all-time high. Margins are expanding alongside revenue. Encora is a multi-quarter leveler, and zero promoter holding and heavy institutional ownership makes it fast beta. So a lot of things are now playing out for Coforge, and that is something that is very interesting to look at, right? And I already showed you from a technical standpoint. And if you look at the fundamentals of this company, if I show you the fundamentals of company, it is right now at 77,000 crore market cap at 40 PE, and usually they look at price to sales, which is at 4.25. I would say it is still slightly expensive compared to the entire market, but it has gone up 73% from here. So actually it was at a very low point just a few days ago, few months ago. If you look at the P ratio, it was sitting at around 26 P ratio for a fast growing company. So this is very interesting to look at. Another company is ICICI Bank, which is India's second largest private sector bank by assets. Now we know that HDFC Bank is having a big problem, massive problem, right? And we are trying to figure out if HDFC Bank is having a big problem, what is the possible solutions for us, right? So we are looking at ICICI Bank because I believe that the PSU rally is also fading off a little bit. And if you look at ICICI Bank right now, their NIMS, which is net interest margin, is at 4.36. The GNPA has gone down from 1.67 to 1.38. GNPA is basically non-performing assets. That means these are people who don't pay back their loans, which has actually gone down. So if it goes down, it is better for the bank, right? Advances have gone up by 19.6%. That means they're lending more, which is again great. And the PAT is also looking very nice. So this is how it looks like. So they have had growth across the board, whether it is PAT, consolidated PAT, NIMs are improving. The provisions are already there. As you can see, the provisions are here. Everything is basically improving. The GNPA is improving, and the net NPA ratios are also improving as well. So right now, if you look at ICICI Bank, as you guys know, the public sector banks were not doing very well. As you can see here, they've still not come back. None of these guys have come back very fast to their all-time high. So ICICI Bank has actually started this journey literally a few weeks ago. Now, I know some people will come and tell me that Shashank, you are too late and it has already gone up. Look, it has gone up only in the last 1 month. Okay, it has gone up in the last 2 months, right? 60 days. It has gone up by only 20%, and it has not even broken all-time high. The day it breaks all-time high is when the next rally starts. So I'm trying to look at what are the companies that are currently doing a pullback already. And if the market sentiment becomes better, then these stocks can actually outperform the benchmark index. So that is something that we're looking at. And again, this comes at a very high point over there. Now coming to the management commentary of the Q1 call, they're saying that our strategic focus continues to be growing the profit before tax, excluding treasury, and they want to basically keep growing their profits a lot right now. Now they're saying that loan growth quality, 20% credit growth called out as a function of economic activity and also policy initiative. So they're again moving very good on that front as well. NIM expansion achieved by bucket-wide system trend and aided by income tax refund. So we have to also see if this is a temporary thing or a long-term thing, but at least the management is in the right direction. Mortgage loans went up by 14%, personal loans went up by 12%, and credit cards also are flat. Now, if you look at personal loans in India, personal loans are going up a lot in India, and personal loans are usually the highest interest rate loans in the market, and they are going up a lot. Mortgage loans are still okay. They're still slightly cheaper as compared to personal loans. So we are seeing a market where things are moving very aggressively, and we are going into a higher debt economy as compared to what we were a few years ago, right? So again, I believe because the advances have gone up by 20%, GNPA has gone down, right? They are also one of the biggest players in Nifty. So if FIIs ever come back, and if the FII has to choose between HDFC Bank and ICICI Bank, they would pretty much choose ICICI Bank at this point. And everything in this company is basically growing. And that is why I think it is a good bullish sign on that front. Again, coming to the third company, I look at TVS Motor. Now this is beautiful because the entire industry is going through a massive change. Everyone is moving from petrol, diesel to now EV bikes, right? And we saw Ather's result came out recently. It went up 14-15%. TVS is doing well. Bajaj is doing well. Ola went completely disappeared, but Ola may be kuch ho raha hai, but I don't want to talk about it in this episode, right? So if you look at TVS Motors, their iQube range has actually done really well, right? And its portfolio spans an ICE, which is internal combustion engines, motorcycle and scooters, but the fast scaling electric two-wheeler business of iQube range, and that is doing well. I even saw in Bangalore a lot of autos are now becoming TVS autos, and autos usually was with Bajaj RE autos, right? Now a lot of TVS autos are coming, and what they're also doing with these TVS autos, they're also giving credit to these auto rickshaw walas also. So that's why TVS credit has also come here, and they're saying they might demerge this entire credit business because it's not good to have a lending business in your main business, honestly, right? Now coming to the growth rate, the PAT has grown by 50%, the two-wheeler unit sales have gone up by 86%, and the export units, they're also exporting, that has has also done really well. So if you look at the consolidated revenue, it's gone up by 33% in this market. The consolidated PAT has gone up by 64% in this market. If you look at the margin, it has also improved by 0.3% to 12.8%. Total vehicle sales from 1.2 million to 1.6 million from 1 year ago, like literally a very massive growth. And if you look at the two-wheeler EV sales, that went from 70,000 units to 1,29,000 units. If you look at the three-wheeler sales, that's gone from 44,000 units to 66,000 units. And international sales has gone from 3.5 to 4.8, and their EPS has literally almost doubled in the last 1 year. And if you look at the TVS credit business, the financial services arm, that grew by 19% year on year to 32,000 crores. And I'm very sure this will demerge in the near future because it makes no sense to keep it under the same company right now. But that is why if you look at TVS Motors as a company, you will see it doing phenomenally well. Only problem is it has always been going up. It had nothing to do with a lot of market sentiments because it is a very domestic driven company. And recently this company has done an all-time high. I'm waiting for the pullback because the pullback has to come. And once the pullback comes, this will definitely start its new journey. And if the demerger happens also, then it will become very attractive as well. It is slightly expensive today at 60p and it is slightly on the higher end, but the premium is given for the growth that it has derived in the last 1 year, and that is what looks very interesting. Coming to management commentary, if we look at this, they are saying that they are cautiously optimistic. They're saying India's growth is going to be 6.4 to 6.5% and a robust Q1 two-wheeler demand supports this, right? So usually what happens when the per capita income rises, when the GDP rises, when the income class increases, they usually buy two-wheelers and then the next level buys four-wheelers. That is why we saw a lot of boom in four-wheeler EVs also doing really well. And we saw people moving from sedan to SUV, right? Near-term guidance, management has guided to outperform double-digit industry growth in Q2 FY27, aided by GST rationalization even now. E-two-wheeler penetration is going across the industry and it is crossing almost 40%, and TVS is gaining market share in both. TVS, Bajaj, they're all doing very well, right? Two-wheeler capacity to rise from 6.8 to 8.3 million units by Q4. Three-wheeler capacity from 0.25 to 0.42. Again, they're doing a 3,500 crores of FY27 capex. Now, international strategy also, they're trying to go more into European market and they're trying to go deeper into the African, Latin America and Asian market. Beautiful. And they literally said this on the con call that board is evaluating an appropriate time a possible separation of the financial services business to further strengthen and unlock shareholder value. So again, this is going to be very interesting because one, they are growing their revenue. PAT guidance has also come in positive. EV is also growing through the roof and it is doing really well. TVS credit demerger might be coming soon as well. And again, it has a tight float and sector leadership. What do you mean by tight float? This company does not have a lot of investments in the public side. For example, if you look at the public shareholding, it is only 8%. 50% is with the founder, 20% is with FIIs, 21% with DIIs, and only 8% is with the public shareholding. That means the float is very less, and these guys usually don't sell a lot, right? FIIs and DIIs usually hold as long as possible. So they are long-term investors, and that is where the game is now coming into the picture, right? Now, coming to the next company, we'll talk about Larsen and Toubro. Now, look, Larsen and Toubro is actually playing a very big instrumental role in our entire ecosystem as of today, right? Obviously, it is the biggest domestic capex player in the country. Okay, anything happens in India, you want to build airports, you want to build anything, Larsen and Toubro comes into the market at this point, right? Now, if you look at their order book is growing at 27% even today. Their order inflow has gone up by 14%. That means a lot of government projects are coming in India, and not just India. They also have 51% revenue coming from the international markets. If you look at their growth, they had a 7% top line growth and a 14% PAT growth. And the money usually comes in this company because it's like an EPC company, which is engineering, procurement and construction. It usually comes back-ended, right? Once the project is close to finalization, they get it and then they have maintenance going as well. But the game here is the order book. And as you can see, their order book is growing very fast. That means a lot of projects will now start coming into the picture, and that is basically going to look at it. Now, margin compression came largely from Middle East execution disruptions. So obviously they have a very big presence in the Middle East, and now there is a lot of disruptions happening in the Middle East, which then gives us the advantage because this company has basically not gone up yet, right? The all-time high was somewhere around 4,400 and right now it is still flat. So that means when the war finally gets over and it's a confirmation that it gets over, things will go back to how businesses were built and at that point it'll do really well. Again, they're saying that the entire financial year commenced against the backdrop of geopolitical uncertainties. That is why the problem happened. The management said 10 to 12% year-on-year growth is there, which will come in FY27, with brokerages noting that this will be a strong second half. Order pipeline has obviously gone up, and these things will slowly start moving up the value chain as well. Now, if you really think about it, I would say at today it is at a very good valuation, mainly because the market is not giving the premium because the whole war situation is going on. And if I actually look at the P ratio of this company, it is coming back to its median. So right, it's coming back and getting corrected in its absolute form, and now it brings a very good momentum. After this will start coming into the picture, right? So as you can see, why it leads the rebound, because the order book is very good. When business starts coming in, the sentiment of the business start coming in will basically push this company as well. And 50% of the revenue is not India linked, and we have rupee depreciation coming in at a very big scale, so that is also going to keep helping the exporters in the market. And valuation currently sits at its own historical medium, so that becomes a very good advantage. Now coming to the last company, I hope you guys are not getting bored. Now comes the last company, which is called Mahindra and Mahindra. Now a lot of people think that the Mahindra rally is over, and I'm like, bro, it's not even close to being over, and I'll tell you why. It is the largest tractor maker in India and the second by SUV revenue by market share. It has grown its PAT even now by 34%. It has grown the revenue by 28%. It has 25% in the SUV revenue share, and there is no debt equity in this company. It is absolutely clean. If you look at the debt to equity, means I think net debt to equity, but it is basically quite good, excluding the financial services arm that they have. So if you look at the consolidated revenue, went up by 28% at scale. If you look at the PAT, again at scale, it's gone up. SUV volumes are going up. Market share is very high in the category. Then they have the financial services arm that has also gone up, and then they have the services business which has also gone up, right? So everything for this company is playing out perfectly right now, and they are still coming out with some really good cars, and that is a big positive. And if you look at the stock price, as you can see here, they have not done the reversal rally yet. It is still far away from the rebound. But another beautiful thing I can see here is that they're also becoming a little bit of hugging on the trend line. And right now it has just taken a trend line support. And this is a long-term trend line, as you can see. It has just taken a beautiful trend line support here. And again, very interesting, because if Nifty rebounds, obviously this company is going to rebound faster than the other companies, right? So basically what they're saying is they have a diversified portfolio. I'll only talk about the important stuff. They said that the management retained mid to high teen growth in the SUV volume. That means they believe that it will still do well. A lot of people are buying new tractors now, so that is doing well, and that will continue growing. Rural demand, healthy Rabi cash flows, given a 19% increase in wheat procurement. So a lot of farming happens. A lot of tractors will be bought at the same time. Auto manufacturing capacity is also going to go up, and new launches are also going to come at that point, right? And if you look at the valuation today, it is basically at a discount to the other automotive companies in the market. So we also look at median. And if you look at the median automotive companies in the market, they are currently trading at a discount, because as of today, Mahindra and Mahindra is at 22p, right? And if you look at the P ratio from a long-term standpoint, it has actually corrected quite well. So again, at a very good juncture, at a very good point. And if you look at this company, it is one of the fastest growers in this company from a fundamental standpoint. And right now it is also attractive valuation. It has not reached all-time high yet. It is still doing the reversal. So all of these things are doing really well for this company, and that is what I'm looking at it, right? So if you ask me why these will move fast, this is a small summary of it, right? The revenue growth and the order book. Here we have the NNPS improving with ICICI Bank. We have TVS Motors having very aggressive PAT guidance and a demerger activity that might come. L&T, which is currently at a low valuation, but if you look at the Saudi markets that will open up very soon, this will again start doing really well. And if you look at Mahindra and Mahindra, they are absolutely growing like a beast. So that is also doing absolutely wonderful, right? So all of these things are basically playing out. And again, what I'm going to do is I'm going to give you this document as well. It will be in the pinned comment as well. So if you want to watch this at your own speed, at your own free time, please do the needful, right? But again, I hope you guys enjoyed this video, and I hope you guys liked this video. This was a deep dive that we do right now in many companies, but I feel that the market is going to change very soon, and when that happens, we will all be very happy. So I hope you guys enjoyed this, and I hope you guys like this. And if you do, by the way, I see a lot of people who are watching this are not subscribers. It doesn't cost money. Please click on the subscribe button. This will really help us grow our channel as well. Again, thanks a lot. Take care. See you. Bye bye.